Take two. Here we go. John, are you ready for this?
Just go.
Just go? Just go?
Just go.
All right, here we go. Welcome everybody to the We Love Money podcast. I am Alex. I am a CFP and I am joined here by John. How are you doing today, John?
I'm feeling pretty good, Alex.
Oh my God, that was quite the intro you just laid down.
I know. We got game 3 tonight. Very exciting.
We need a win. We are Panthers fans. Cup champs are not looking so good right now. We need a W. I appreciate that pump up music. Hopefully we do not get copyright infringed for jamming out some tantric. But I respect the John.
Well, we weren't going to until you said the name, so thank you for that.
Well, credit to Tantric, because gotta give credit where credit's due. Welcome back, everybody, to the We Love Money podcast. Again, I am Alex. I am a CFP. I am joined here by John. You've already said hello to everybody, John, so you do not get to say hi anymore.
Aw.
Too bad. And we are back to talk to you about money. So today we are going to start off, and John, I have got a topic that I am hoping will keep us talking for some time. Today, everybody, we are going to talk about one of John's favorite things in the whole wide world. Any guesses, John?
Ulta Beauty.
Ulta Beauty. Yeah, no, not Ulta Beauty.
Collectibles.
Not yet, John. Nice try. Today, we are going to talk about options.
Options, the word of the year.
Options. For those of you who do not know, options is a word that John loves to use on any occasion he gets.
It is very true because everything much in life is options. You have the option to do so many things.
Well, today we are talking about options as it comes to investment options, like the thing you use to invest.
Not trading options.
Well, yes, trading options, yes. Well, investing, trading, those are the kind of options we're talking about. That's my point. So what I want to do here, John, is I want to turn it over to you, and I want you to define what you think an option is. And then I will come in and clean up whatever mess you make. So for everyone out there, what is an option? What are we even talking about?
Well, it's very relative, I feel like. I mean, for me, options is giving yourself the most prime opportunities.
No. I'm talking specifically about options, like the investment vehicle options.
Oh, goodness.
Like options contracts. Like what is an option?
Well, options,
like describe it to everybody out there in your definition.
So
what you think
the word is amazing. The trading of options is quite extensive. I find it to be very fun and at the same time feeling like my heart rate is running a marathon at the same time.
So this is about as effective as I expected John to be able to describe what an option actually is. Sorry, John, I did not have high expectations for you to be able to actually like verbiage what it is.
I've done it before. I still don't fully understand it, which is probably why I didn't do very well. But ideally what you're doing is with an option is you're buying something at a point that you think it's either going to go to, and whether it goes that way is fate's decided. I don't know.
Dude,
it's terrifying.
Honestly, not bad. Not as bad as it could have been. So that is not bad. And to clean it up, like I said I would do. I'm coming here and clean it all up for you. To give a description of what an option is for everyone out there who has no clue what an option contract is, I'll tell you what I think in my little analogy for it, and you let me know what you think about my analogy, John. So I would compare it to like a life insurance policy, like a term life insurance policy. So for those of you who are unfamiliar with term life insurance, essentially you're taking out insurance on your life for a set period of time. So whether that's 5, 10, 15, 20, 30 years, over that period of time, you're insured. You pay monthly premiums, which are usually pretty low as far as insurance goes. And if you die, you get paid out. So in that circumstance, the insurance pays off big. Probably in most circumstances, you're going to get a big old life insurance payout depending on your policy. But the term expires and you don't die within the parameters, you in reality ended up paying for something you really didn't need, right? You end up like paying all these premiums and you didn't need it, right?
Yes.
You with me?
Yes.
So that essentially is what an option is, but instead of your life being the trigger that causes you to make or lose money, it is a stock triggering a certain price, either to the upside or to the downside. Does that sound like a pretty...
I think that was pretty accurate, yeah.
And you get paid out if you're, and again, not if you die, but if the stock passes whatever price you thought it would be, and it triggers out.
It just feels, I don't know if I can fairly, maybe I just don't understand it enough, but it doesn't seem like it's an accurate, because I feel like when you're doing an options trade, it's really just all or nothing.
Well, here we go. So let me explain what John
Whereas
means by that.
Insurance policy
so let me explain what John...
something, it's just not always...
Well, no, an insurance policy, especially term, is either all or nothing either. I mean, again, with a term insurance policy, you're literally paying a premium, and if you don't die, you don't get anything. If you die, you get everything.
That just really stinks.
But the difference that you're describing is that usually term insurance policies are like long periods of time, and with options, at least in your experience,
short.
It's not very so furthering on my example, right? Keeping on the exact example. So that is what options were designed to do, right? They were designed, in my opinion, originally to be insurance on your stocks, right? So if I own a stock, I can buy protection to the downside. So I buy the ability, an insurance policy that lets me sell my stock off to somebody for a locked in price. That way, if it goes below that, I don't lose my shirt. I have basically a stop loss in place. Mm-hmm. That's how they were designed to be used. But banks and people, and just being the beautiful degenerates that we are, and that we love to just take a great thing and make it into the most terrible version of itself. Most people now use options for very, very short-term price movements. And that would essentially be like, in my example, buying a week-to-week insurance policy that's dirt cheap because your odds of dying that week are probably very, very, very low. So it's not going to cost you very much money. But if you did die that week, you would make a killing. You'd make whatever, $500, $1 million on that. Well, you wouldn't. Your beneficiaries would, because you'd be dead.
Because I'd be dead.
You'd be dead. But essentially, that's how I would describe an option. You're taking insurance on a stock, and it was meant to be that exactly, insurance on stock you own. But now people take it and they basically use it as a degenerate gambling, savage way of investing.
Yeah, because that's, I feel like, how it is. Again, anytime you see anyone talking about options, whether it's on social media or even in just the markets, it's just very short, same day type of options.
No doubt. And that's how we started trading options ourselves. Like I said, so ultimately,
it was terrifying.
And the reason I wanted to bring this topic up is because I feel like I see a ton of people doing it right now, and we were doing it, me more so than you, but you doing it too, before it was cool. So, I mean, I feel like we definitely can understand why it has become so popular. So let me get your take on that. Why do you think it has become so popular? Because I think I see it everywhere now. People.
I think it's because, again, if you can afford to take the risk, your reward is extremely high. High risk, high reward.
So when you
again, it's that is, again, I think we're in an era where quick money is always kind of the forefront. We have a lot of people who are working very tough jobs and they don't really enjoy it, or they're not in their field, or whatever it may be. I can't tell you the amount of times people go to college and then they don't even practice what they majored in, myself included.
Yep.
So I think this is a very appealing route to go for a lot of people, where, again, money can be very easily accessible. And yes, of course, it's very risky. But risky is relative based on your current situation.
But just so everyone understands in there, so that everyone's on the same page, when you say risky, be super clear what you mean.
So when you do an options trade, you have a very high risk of losing it all.
Losing it all. Every single penny.
Again, when you buy a stock,
especially
you buy a stock, normally you buy the share, whatever it may be, and then the company, the symbol ticker goes up and you make money. If it goes down, you lose some money, but there's still a pretty sizable position
remaining,
dollar-wise, remaining.
Yeah.
So if you buy 10 shares at $100, so you got $1,000 invested, and those shares go to 120, great, you're making 20 extra a share.
Yep.
But if it goes down to 80, you're
You're
still
losing
able
20%.
to sell out
Yeah.
and keep 80% of your position
100%.
versus options.
You
gonna
either
do
die
that.
or you live.
Exactly.
Like there's no
gray area with options.
Yep. And then once you enter that area where you are cashing in, obviously, depending on how high or low a stock goes, your gains can be like really exacerbated. And just so like we can clarify, I mean, there's the capacity. So before I do that, actually, so I think what attracts people to it is exactly what you're saying, is that like, I think that there is like an element of, I want my hard earned money to do the most it can do, but also I think there's definitely an element of just pure impatience, right? Is that people, especially young people, that is the hardest hurdle to overcome as a financial advisor, is that when I present the benefits of investing to somebody, they look at it and the first 3, 5, even like 10 years, it's just like,
not appealing.
Is this worth it? Like that's 10 years of work and that's what I'll be left with. And again, that's where compounding interest really comes in, and I try to stress and show the math of compounding interest. But when you put that up against something like an option where I can literally go in there and with, a couple $100, yes, I'm risking losing all of that in the snap of fingers, which won't go into the details of that today, but that's what you're risking. You stand to make with a couple $100, like 3, 4, 5x, sometimes even more than that, depending on how right you are, but $1,500 on 3. So that is that like instant gratification, that gambling, and that's
what I was going to say. It's I think also with like Hard Rock now having the app of sports betting and sports betting, other different companies out there that are offering it. I think that is the biggest component of that. Is more people I feel like are betting and gambling more than ever, and
absolutely.
It's mostly sports betting related. But again, I think options is that
right in the same avenue.
It's the market version of sports betting.
With crypto, with collectibles, with all this type of stuff. And I think I'll even take it a step further, and you let me know what you think about this. I think it's really kind of the cultivation of a generation that wants to make money doing nothing. Like doing as little as possible, right? Because you even look at like something like, I can't believe I'm going to mention this on our podcast, but I got to bring it up to you because I got to tell you about this. It blew my mind. But something like OnlyFans. Right? Right? Dude, straight up. Like, so I literally randomly popped up. I was like scrolling through like whatever, and there was a post that somehow led me, and I had a curiosity. I've never been to OnlyFans ever, like on any kind of page. And I literally, my pure curiosity was I wanted to see if I can determine how much money this random person is making. Right? So I literally clicked on the page and it takes me to their homepage, and I will not describe the homepage to you because it's exactly what you would imagine from an OnlyFans page, but I found what I was looking for, and this random person doing random selling her soul kind of things, I would presume, had 835 followers and was getting paid $32 a month per person. Now, I did the math out on that, and that comes out
insane.
To, John, $26,000 a month. $320,000 a year for 835 customers to literally just do like, I don't know what it is, but dude, that's not a real job. And that is where we're at in the world. And that is like, again, I bring this up because I feel like this is like a greater product of, we want to make money doing nothing. And to circle it back to options, this is another means of that.
Yeah, it's directly correlated to that. That's insane.
Which is crazy, though, because the reality is you and I both know the odds of success in doing options are like nothing, incredibly low. So
you either got to be really lucky or just...
But even not even really lucky, because you can be lucky once or twice, but you got to be disciplined, which that's the problem, is that most people are just not disciplined. It takes a ton of discipline to be able to.
It's the classic, you hit the big, and then you imagine going into a casino and you hit big. How many people actually take the time to walk
away while they're up?
To walk away.
Yep. So walk away while you're up, and then literally not go in there and just exacerbate it the second time, like right back around now. Because when I was trading options, that happened to me all the time, where I would have a huge win, and right off the back of a huge win, I would take a bigger position than I normally would take. It was like, I don't know if it was that like winner's luck feeling or whatever, but if normally I was spending $50, $100 on a position and trying not to risk more than that with an option, I would hit a huge winner, and I mean like a huge winner, make a ton of money for me at the time, and then I would the next time take a $200, $300, even $400 position, because like psychologically you want to snowball it, right? And then also I'm playing with house money. But then as far as options go, you probably can guess what happened to my bigger position.
Mm-hmm. I can definitely I can surmise.
It didn't. Poof! It's gone. It didn't do too well.
Didn't do too well. And something you've always said to me, and I've always remembered: the further you go from zero, the harder it's going to fall. And especially when it's something like that, where there's no protection at all.
Done.
Again, the bigger your position in an options trade, we talked emotion on this podcast a few times episodes ago.
Intensity.
Talk about intensity, heart pumping. I mean,
I get the addiction. It literally
takes day trading to a whole new level.
It's full on gambling where you literally it's like horse racing that's like perpetual and live. You basically get to place your bet and watch your horses do it. And you're like, come on, get it, come on. And literally, you guys, we're sitting here just so we can give full context. This could change, especially depending on how short term you're playing these options. This could change. You get up and go to the bathroom, and you come back, and it's a completely different ballgame from when you.
It kind of reminds you like crypto.
You can't leave the chair. You can't take a call. You can't move from your seat because single dollar movements of a stock in a single direction for like a stock that's several $100s, which is happens very, very quickly. That can make all the difference.
Yep. It's terrifying.
It's crazy, isn't it?
And people do it, and they love it, like you said. I think, again, it's definitely come down to the fact that we're in a time where, again, patience is at an all-time low, and we have a supercomputer in our pockets all the time, so we get information quickly. The attention span is 15 seconds. It is just instant gratification is what.
Bro, you just literally have teed me up so epically for the second topic that I brought to the table, which the second thing I brought to the topic. So we'll close it out on options there if you're good with it.
Yes.
All right. So we're good on options there, which my second topic I want to talk about, if we had time, which we'll switch to right now, is the balance in a time like this, especially when the market is uncertain. It's kind of, unclear whether it's going to continue a rebound from here, whether we're going to keep going down, what exactly is going to happen. The balance between being patient and playing offense in a market like this, right? Because I think you and I, we both sit kind of in the middle of that balance, but I feel like we sit on other separate sides. I feel like I am more on the side of being patient, and usually that makes me maybe a little bit late on my trades. I'm a little bit late getting to the party because I'm just patient and worried. Whereas you, I feel like, are a little more confident in the process. And I know I know this might lose me money, but I'm going to steadily take advantage of it. And I know the risk that I face here. And you end up maybe being a little bit early on the trade there. So I want to talk about the balance between that and kind of get your perspective on, especially in times like this, riding that balance of patience versus taking advantage that we're kind of in a depreciated market, because we're definitely down from the highs of the market.
Yeah, 100%. I think that is, I can speak for myself. So I'll give you a perfect example. My account right now, I'm in a position now where I've sold off a lot of mutual funds just to free up some cash, just so that I'm ready to pull that trigger whenever it comes time to being there. But that stinks for me, because the saver in me is like, okay, I'm losing interest on this. This money's just sitting in cash, just not earning anything like in a checking account. And
versus me, right? Just for context, versus me, I have almost all the money in a money market earning interest, and I'm like, I am not. You got to pry this money from my cold dead fingers.
Exactly. So I'm sitting up in the tee up situation where I'm teeing up and I just don't know what to hit just yet.
Yep.
So that's the patience of okay, I trust the process. I know, like you said, we're in a downturn, and I do see from the trends that I am looking at for the companies that I'm interested in, it getting to the point where I'm ready to make that move.
Yep.
And that was a learning curve, because again, it eats at me knowing that there's days, weeks going by where that money's not earning anything, and it's not working for me. And I don't like that feeling, because I've always been raised that way.
Yep.
But I've learned that sometimes even just those little extra months and weeks, months can open the door so that way when the time does come, you're not in okay, I need to sell this and wait for the, business days for it to clear. And now I can make the trade. Now I'm ready. I'm teed up. I'm ready to go and pull the trigger when the opportunity presents itself.
No doubt. And I think that it kind of plays into what we talked about last week or the week before with your strategy of, especially nowadays, really being diligent about fighting off chunks and taking little waves of the position. Mm-hmm. I feel like that definitely probably helps you.
Yes, 100%. Because again, every single time I make the trade, it's like you said earlier, as we were, discussing this topic, it is the risk factor. And by doing it in chunks, my risk is minimal every time.
Yeah.
And so if it even goes lower, it's more minimal. Yes, of course. Can the company bottom out completely? Can it go bankrupt? Of course, there's those factors that you have to consider always, even if it's a reputable company. You don't know what's going to happen.
Of course.
You could turn on the news and you find out the CEO's been laundering crypto for the last 2 years and you have no idea. I mean, again, it happens.
100%.
It's already happened.
100%.
Look what happened with FTX.
Of course. And even that, it doesn't even need to be company specific. It could be geopolitical, tariffs. There's all kinds of things that could come out and
make or break a company.
And make or break the market. You know what I mean? So furthermore, I think taking off chunks absolutely helps you kind of ride that balance because again, like to show the flip side of it. Like for me, what I have been doing recently is I will be ultra patient, jump into a position kind of fully, like, more or less, like I said, when I want to be in it. And then if it does come down a little bit, I'll take another little chunk of it there and then let that work. And especially now that I'm working on putting a lot of dividend stocks into the portfolio, that has worked for me. Like I think because I'm usually so patient that I'm waiting for these stocks to get so just downbeaten that at that point I feel like I know my risk is low enough that while it could still go down, a lot of the risk has already been taken off the table. You know what I mean? So at that point, I kind of go a little bit bigger, and then I kind of expect that there's definitely potential. I'm not catching the bottom here. I'm not a psychic. There's going to be more downside, and if it does, I'll take little chunks here. And if it gets much worse and it continues to just exacerbate, that I might consider adding, a second time. But now that I think that we're more in the place where we're no longer considering stocks that have the potential to go to zero. We're considering higher profile, higher, more reputable blue chip type of companies. That strategy, I feel pretty confident in it. And I think that whether you lean on the side of me or the side of, like I said, John over here, and like I said, and taking off little chunks, I think either way, what it shows that we both kind of have
the patience and
a plan, right? We thought it through. We have a reason for doing what we're doing. Because going back to our conversation about options and we were talking about discipline, that is the most critical skill, not only with options, but with investing
in general.
In general, it is make rules. I make money. I take my profits. Don't just let yourself be twisted into letting it go and go and go until your winners become losers. When you buy something, know that it could go down and have a plan for that. You know what I mean?
It goes back to what we said in the first podcast. Goals are so important. You need to make sure you have goals for yourself and what you envision for every trade you do. It doesn't go just by your account. It doesn't go just because it's a retirement account. It goes based off of what each individual trade should have its own goal for you.
Yep. And I think your situation personally probably has a lot to, not probably, does have a lot to do with it as well. Because take a look at like cash flow. If you have a pretty healthy positive cash flow and you have more money coming in that you can throw at new things, that kind of gives you the ability to be a little more liberal with making these decisions, right? Mm-hmm. Is that I can throw this at that. I can activate this plan because even if it's a mistake, regardless, I have more dry powder coming right behind it via my job, via my paycheck, via the money that's coming in versus if you are not in a really super, super positive cash flow situation and budgets are really tight, you have a 401k or a lump sum there or an IRA or some kind of big lump that's where all the money is. It's mostly invested. And you're kind of like, you got to be a little more tactical probably with that.
For sure. I understand that 100%. And again, it still comes down to just having the discipline of, okay, like taking whatever percentage that you can and putting it towards, like I said, if that's your focus, if you don't have a lot coming in and you're really depending on, let's say, retirement accounts. And that is the goal, is that whatever month it is going through, there's that small amount, doesn't matter the size. It could be $25. It could be $200. It doesn't matter. Just putting it that little bit into that targeted retirement account to set you up for a brighter future.
Habits are more important than results.
Exactly. And again, things change. You might get a promotion. You might get a new job. And those new habits carry you over where, again, I've seen people who have not taken the steps and been mindful of what's coming in, even on a low points. And then all of a sudden, the high points come and they're on top of the world. Great feeling. That's awesome. But what happens to that extra cash flow?
Yeah.
It's almost like it's like overstimulant, and you just people go on like major spending sprees, rack up credit cards, and then stuff happens. AI comes out and the job's no longer there, or you didn't really like the job and you pulled away. I mean, again, it just puts you habits carry with you and build as you progress.
Yep. It literally is.
So just getting to that mindset of, again, $25 a month doesn't seem like a lot, but it's $25. Have respect for the dollar.
Yep. And that is a thing to be celebrated. Again, if you can continue, if that's your capability and you commit to doing it and you actually do that, that is something to be celebrated. I mean, there's everybody's situation is going to be different, and habits are more important than results. You know, I liken it to the channel that we're trying to build here. It getting 2 views, 3 views, like if any content creators out there know what I'm talking about. The results at the beginning are not what's important. What's important is getting into the habits of doing this stuff, because that's what's going to, regardless of when the following comes, that's how it's going to be successful. You have a habit of doing the right thing, and it's far more important to build those habits. And that's exactly how it is with investing. When it comes down to it, and saving and your personal finances, is building these building blocks inside of your habits and your daily routine. And that's what made you in general so successful, JJ. I feel like your parents did such a good job raising you in that regard.
Definitely. That
you are super disciplined. When you have like your box of rules, you are committed to them. And that the result of that is you have a lot of really, really good habits that make you a good saver, a good investor, and you're really like positioned to just be successful in it because you have a lot of those. That's your personality. Is a lot of those. That discipline and those habits are built into you.
Yeah, and it comes with, again, sacrifice. Like there's a lot of wants that we want in life. Like, again, perfect example. Like I'm doing very well. I'm very blessed. There's a Panthers game down south this weekend. I would really love to go. Could I take some money out of my savings to pay for that ticket because the tickets are expensive? Absolutely, I could. But that is not really part of the overall goal and plan that I've set for myself. So as much as I want to do that, that's a sacrifice that I'm making.
Yep.
Because again, it's not mixing in with the cash flow and what's left over for everything else that I have to do. And that really stinks because I really want to go, but I'm letting that past habits dictate my current behavior. And of course you want to have fun. You want to enjoy your life 100%. But I just, my goals, the goals that I have are setting me on a path that will hopefully get me there down the road.
And this is why John is your representative, everybody. Listen to how logical, practical, and disciplined that approach is. Someone like me, and all you out there probably, we'd be at that game, going into debt, doing what we got to do, sparing no expense at the game, hitting the gift shop, doing it all.
I can't promise that would be my mentality if we make it to game 3 of the finals, for sure. But I also think that's also why I'm holding out, because I know that hopefully we make it to the final. And then at that point, I'm like, yo.
Because now we've been there before.
Remember that thing we were talking about a month ago? This is what we've been saving for.
Oh my God. Well, dude, this is a good spot. Do you have any questions for me?
I do actually. So there's a question I've been kind of pondering over, and we've discussed it a few times before. And I think it's really important just kind of going with what it kind of segues from what we discussed about quick money. We both have retirement accounts. I'm sure a lot of people do who are listening. We've always had that mentality of kind of, this money we're not going to touch for 30 years, 40 years, whatever it may be, whatever your timeline is based on your age. Is it advantageous or is it the right move to maybe be more aggressive and risky in those types of accounts, in your opinion, or maybe more a conservative route is the best course? And we've kind of tossed up on it, and I know we've talked about it, but I really wanted to bring it up in a topic with you because I think it's important. Because again, I do think that there's some truth to both, right? Mm-hmm. Yes, we're not going to see that money for 34 years, but again, we've talked about it, and lately a lot of those risky things have been not so.
So here's my response, and I'm actually sitting here thinking about how I want to answer this as you're asking it, because I've actually thought about this, and we have talked about this a bunch, and here's what I think I would say. What I would say is it depends on the degree of the risk that we're talking about, because I think what you're asking me, if I can clarify, is whether retirement accounts are the right place for ultra risky things. Yes. Because basically I know we've had a lot of conversation about it being a great place for those types of investments, because if they hit and they grow and grow and grow and grow, they're in a tax advantaged account. So you're not going to be paying capital gains tax on that kind of move. But on the flip side, if you lose, if it's a big loser, you do not have the ability to harvest losses in an IRA or in a retirement account. So if it's a big loser, you can't take those losses with you and use them against gains. So the way that I would answer that question now, today, in my old man Alex, 34-year-old version CFP Alex.
I got your cane right here, buddy.
What I would say is it depends on the degree of risk. I think that if it's a stock that you expect to grow, right, but you think there's no real chance it goes to zero, an IRA is a great place for it. Like, I'll give you an example. If you have something like what would have been like an Apple or anywhere along the way, right? I'm not even saying when it was like a little baby company. I'm saying anywhere along the way, that's a company that definitely has a chance to, if you're going to hold it for 15, 20, 30 years, you would imagine when you're buying a company like that, something like Carvana. Not to rub it in, John. I literally just said that to troll John. We're not recommending either of the stocks that we just said. But my point being that if you think it has the ability to really, really grow, but it, going to zero is not really on the table, I think an IRA is a great place for it for the reasons that we said, because it can grow. If it really takes off at any point, you can take some kind of gains, do some kind of stuff, and not have to worry about those taxes. But if you think this is like a flyer, like this is a company that's not really rated by many people, I'm just going after it, then I would say to put that in a non-IRA type of account, because if it does take a bath, I would really prefer to be able to use those losses and take those losses and use them against gains. Whereas if they were in the IRA, you wouldn't be able to do that. So I would say if it's a growth first stock and it's like a high quality growth first stock or like higher quality growth first stock, IRA is a great place for it. If it's like a life or death situation, like an option, again, I would rather be in the other side so I can take that loss.
Well said.
Cool.
Thank you.
All right. Well, I think that will do it for us here today. We are right up against time. We appreciate everyone hanging out with us. We will be back next week for another conversation on personal finances and investing group therapy here, because that's what I've decided this channel is, John, is that it's an educational channel / a group therapy, like investing group therapy. We all suffer together and we're in this together. We're here with you. We got it. We'll all make it through.
Well said. I love it.
All right, you guys. Well, until next time, I'm Alex. This is John, and this is the We Love Money podcast brought to you by Alternative Finance, and that is Finance AF.